This man's net worth is a whopping 12,110 crore USD, making him the 7th wealthiest man in the world. With a humble start and a steadfast commitment to value investing, he transformed himself into one of the world's wealthiest individuals, proving that patience, wisdom, and discipline are the alchemical ingredients to turn stocks into gold. His timeless strategies have not only generated colossal wealth but also enlightened generations of investors, solidifying his legendary status in the annals of finance. Who am I talking about? The one and only Warren Buffett. Hello and welcome to my YouTube channel. And today we are going to learn about the top 6 ways to become an investor genius like Warren Buffett. Number 1. Ignorance is the real risk. You know, investing can be a bit of a tightrope walk, especially when you are not entirely sure what you are getting into. Take stocks and cryptocurrencies for example. Many people dive headfirst into these markets without really grasping the ins and outs. They see high returns and boom, invested. But here's where Warren Buffett, the financial wizard, drops some golden nuggets of wisdom. This is Buffett's mantra. Don't chase every shiny opportunity. Stick to what you truly understand. Even the oracle himself admitted he was a bit clueless about tech stocks for quite some time, so he steered clear of them. It wasn't until 2016 that Berkshire Hathaway jumped on the Apple train after getting a good handle on the company. What's jaw-dropping is that Buffett's avoidance of the tech frenzy didn't hold him back one bit. When we look at Berkshire Hathaway's performance against the Nasdaq of the last couple of decades, it's like watching a master at work. Berkshire consistently outshines the Nasdaq, proving the brilliance of Buffett's approach. Now, that's some investing in magic. So learn more about where you're gonna invest and do some analysis and then proceed. Number 2. Steer clear of debt-driven stock gambles. The golden rule for aspiring investors. So, here's something that really gets under Warren Buffett's skin. The idea of staking your financial future or borrowed money in the stock market. To him, it's like putting all your chips on a roulette wheel that's known for its wild spins and unpredictable moves. And it doesn't matter if you are eyeing a rock-solid stock like Berkshire Hathaway. To drive the point home, let's take a little trip down memory lane and peek at Berkshire's performance over the past half-century. In those 5 decades, we've seen 4 major slumps, one in each of the 1970s, 1980s, 1990s, and 2000s. Each time, these dips lasted anywhere from 6 to a nerve-wracking 24 months, wiping out a good chunk of the company's value. Yet, even a heavyweight like Berkshire Hathaway isn't immune to the market's wild mood swings. So, you can see why Buffett is not a fan of betting the farm with borrowed cash. Think about it. It's a huge risk betting someone else's money. You will be paying off your debt while losing the money you are still paying off. Painful. Number 3. Forge money-savvy habits. In the world of finance, adhering to the wisdom of Warren Buffett and forming healthy money habits is akin to crafting a robust financial framework that secures a prosperous future. It commences with an astute budgeting, where one allocates resources prudently to fulfill both immediate necessities and long-term aspirations. A good practice is consistent saving, creating a reservoir for unforeseen circumstances, and seizing lucrative investment prospects when they present themselves. By judiciously trimming superfluous spending and stemming impulsive financial decisions, individuals can fortify their fiscal discipline. Wise investment choices and a diversified portfolio lay the groundwork for long-term wealth growth. Guided by Buffett's enduring principles, meticulous debt management assumes a pivotal role in this journey, ensuring that financial obligations remain manageable and interest outflows remain minimal. Maintaining a vigilant watch over income and expenses using financial tools aligns with Buffett's emphasis on financial mindfulness. Cultivating these habits, in line with the sage advice of Warren Buffett, not only enhances financial well-being, but also paves the way for a future marked by tranquility and financial autonomy. Before we dive deep into the rest, hit the subscribe button and let me know in the comments section below about your most preferred investment strategy. Number 4. Stay clear of borrowing, especially with credit cards. Buffett amassed his wealth by harnessing the power of interest to work in his favor rather than laboring to repay interest. A path many Americans follow. In a 1991 address at the University of Notre Dame, Buffett said, "I've witnessed numerous individuals stumble due to alcohol and leverage." With leverage referring to borrowed money, he emphasized that in the world of smart investing, excessive borrowing isn't a necessity. If one possesses astute financial acumen, significant profits can be generated without resorting to borrowing. Buffett particularly approached credit cards with caution, offering advice to steer clear of them entirely. He cautioned against their use, citing exorbitant interest rates. He stated, "Credit card interest rates are exceptionally high, often reaching 18% or even 20%. If I were to borrow money at such rate, I find myself in dire financial straits." He definitely knows what he's talking about. Number 5. Save for rainy day. Warren is not just famous for his humor. The man knew a thing or two about being thrifty. Rumor has it that he wouldn't pay more than a measly $3.17 for breakfast, but don't let the frugal exterior fool you. There was some serious strategy at play. Buffett's golden rule was pretty straightforward. When money is flowing like a river, save it up for a drought. The strategy of his really sparkles during two pivotal moments: the wild ride of 2000 and the financial roller coaster of 2008. Back then, critics were all over him for holding cash instead of diving headfirst into the stock market frenzy. But here's the kicker: Buffett was playing the long game. He was quietly amassing a war chest, waiting for the day when the crazy high prices of companies would come back down to earth. And boy, did that strategy pay off. The big lesson here is timeless. When life hands you lemons, don't just make lemonade. Make pints, jams, pickles, and heck, sell the extra lemons for a tidy profit at the market. As the Oracle of Omaha himself put it, every once in a while, storm clouds will gather on the economic horizon and show us with golden opportunities. When that happens, don't bring teaspoons, grab a washtub now. That's some sage advice. Finally, number 6. Time, the best ally of a remarkable business. Now, picture this. There are two friends, Alice and Bob, starting with $10,000 each for their financial future. Alice decides to put her money into a stock market index fund with an average annual return of 8%, while Bob opts for a savings account offering a fixed 2% interest rate. Fast forward 30 years, and Alice's initial investment has grown to around $100,627, thanks to the power of compounding. Meanwhile, Bob's money in the savings account has grown to approximately $60,386. The difference is staggering. Alice's investment outperforms Bob's by more than 6 times. This example vividly demonstrates how compounding can work magic for your investments, emphasizing the importance of making smart investment choices over the long term. Growing your wealth is like nurturing a garden. It requires patience and consistent care. It begins with smart saving and disciplined spending, allowing you to plant the seeds of your financial future. Over time, with wise investments and prudent financial decisions, your wealth can blossom into a thriving forest of opportunities. As your wealth continues to flourish, it opens doors to financial security and the ability to pursue your dreams with confidence. Warren Buffett's investment strategy really is like a seasoned chef's secret recipe. He goes hunting for companies that are diamonds in the rough, undervalued but with solid foundations. What's fascinating is his patience. He's in it for the long haul, not the quick gains. It's all about value investing for him. Finding stocks that are genuinely worth something, not just getting caught up in the day-to-day market chatter. There are lots of financial influencers out there preaching about wealth generation and investments, but why not just follow Warren Buffett's strategy? It's tried and tested. Follow his strategy and see for yourself. That's all for today, and you know the drill. If you like this type of content, then hit the like button and subscribe to our channel. I will see you guys in the next video. Thank you for watching.